Go ahead, Dr. K.
Good day, everyone. Well, you can see that the markets are chopping and churning here as we're in a period of elevated volatility with the correction still underway. The question, of course, is will the markets be able to find a floor like they have in the past? And that is predicated on, I suppose, a couple of major factors. First, we have the price of oil, which continues to slide. We have global markets, which also continue to slide. China being the headline market. There's no end in sight to the downtrend at this point. And then the countering that are the central banks that are printing money, and in the future may print even more, according to various central banks, Japan and the ECB, Bank of England, and so forth. But then you've got Yellen saying that the rate hikes may be slowed because she acknowledges the turmoil around the world. And at first that was interpreted as a bullish sign in yesterday's trade after that announcement came out. But then the markets reversed and headed lower as it started to sink in that Yellen's words are not as dovish as the market was hoping, and that the interest rate hikes are still on the table. They might not come as fast and furious as 4 rate hikes this year, but nevertheless, they're still on the table. And the markets are nervous about that. We have a downtrend intact, so on a technical basis, everything does not look good. Leading stocks, I know that IBD followed through day the other day, and there's just no leadership out there of any real of a so that's a big clue right there that follow-through day that they called is the height distribution day. And statistically speaking, when you get a distribution or a follow-through day, the odds of that follow-through day are, I think, 3% based on my calculations. In other words, it's probably not going to work, and this market is probably going to head lower. And on a sentiment level, there don't seem to be enough bears out there just yet to mark a significant bottom in the market. So there's a few headwinds that are pushing this market lower, and until we see otherwise, we're going to take a very defensive posture to what's coming at us. And I think that looking at Facebook, and that's I guess the one bright spot that it had great earnings, so it's gapped up substantially. Google, I guess, is the other one that seems to be somewhat resistant to the downturn in the market, but it's very scant out there in terms of what looks reasonably healthy. It's a fairly ill environment on many notes, and so I think the odds favor further correction at this juncture.
You done, Dr. K?
Gil, are you there?
I am. Yeah, I didn't hear.
Yeah.
I didn't hear you pass the baton. Well, okay. I think you can deal with the market on very practical terms right here. My feeling this morning was that you could look at this morning's rally or the opening as a shortable opportunity. I think we talked about some of these names last week, and I'll go through those in just a second, but I wanted to point out something on the indexes. You can see on the NASDAQ, you're running into, on a closing basis, you're running into the lows of last summer in September, August and September, and that seems to be presenting some overhead congestion for the general market. So it looks to me like you got to see this kind of pelt its way through here if there's any chance of a rally up to the 50-day moving average. Same thing goes with the S&P 500. You can see here, how you're pushing up into this area of congestion just a little bit, but once it starts to thicken up, you notice how that's where you run into resistance, and so you reverse yesterday. Now today you've been all over the place, but I still see a fair number of short sale opportunities popping up on my screens. This morning, of course, we have Facebook is jacking on a big gap up move. I don't know if I would treat this. Would you treat this as a viable gap up, Dr. K? Yeah, it doesn't sound like he's there. Everybody else hear me okay? Just want to check that. Okay, good. I'm just going to continue. In any case, I suppose you could treat this as a viable gap up if you wanted to, using the low at 104.81 as your stop. But the one thing I'm watching for is a possible failure, because it sort of reminds me of Apple back in, remember when it had a gap up move here, and big earnings report is very strong, and then it reversed and broke down. But it did close up on the day of this little gap up here in mid-July after they announced earnings, and then it started to falter after that with the market. So I'd be watching this over the next few days and see how it pans out, because if the market is going to top, I think you'll see Facebook roll back in, and so that's something to keep in mind. I'm not so sure I'd be buying this, because it is something of a late stage base, and you're coming out of this straight up off the bottom here after testing the 200-day line and coming down on top of this structure here. So to me, it seems a bit dicey in terms of being a viable gap up that I would necessarily buy into. You're also coming right up along the highs here, so that could present some overhead resistance. But we'll see how it plays out. I'd say just play it fluidly and just watch to see how it plays out. But I think the market in general has some issues. I mean, we opened up big this morning. We rolled over, what, 50, 60 points on the Dow, and now you're back up 46. So you're very volatile on an intraday basis, which makes it more of a day trader's market than anything else if you're very nimble. I mean, I don't carry short sale positions, at least not heavy ones, overnight. I held some CCL, Carnival Cruise Lines. I think we talked about this one last week. Along the 200-day line, shorting it yesterday and here day before, or a few days before, and you see this is broken down, undercut this low. So for me, that's a short-term cover point. Of course, I covered around 46.70 underneath this 46.86 low from last week, and the turkey just kind of keeps going lower, but it goes below 46 just to tick me off. But now it's starting to come back up. So I'm going to take that. It's a nice profit in a couple of days, not quite 10%, and so I'll take that and let things kind of work their way out. You also have another one, Royal Caribbean was also shortable last week along the 200-day moving average. I think we may have, did we talk about these last week? I hope we did, because they've turned out to be pretty good shorts. But it also just undercut this low at 46.20 or 76.20, and you're seeing it rally back up. So I take those profits. And it's easy this morning, if you're seeing the market open up and then it reverses and you're short and you're making money, you really should stay disciplined in terms of knowing where your profit points are and then taking them when they get there, at least partial profits, and then deciding what you're going to set as a trailing stop, and stay disciplined in that regard. Yes, sometimes they go down a little bit further, but most of the time they bounce. And in this market, the one thing you got to guard against is this jack against you that can happen at any time, because I still think you're in very much a manipulated environment where things can suddenly flip one way or the other very quickly, and you've seen that happen with the market just up and down over the last 4 days. I mean, what were we down on the Dow? What, 208 on Monday, and then up 280 something, I think, on Tuesday, and then yesterday we're down over 200, and today we open up over 100, and I forget what the peak was, but that rolls over, and then it bounces back to the upside, and now we're in the green right now. Most of this is on the heels of Facebook, but in the process, you're still seeing a huge number of stocks that look like garbage. And I'll just flip through all of these. If you look at, for example, you got Amazon. It has broken down. It filled this gap. We talked about this last week. So if you're shorting it in here on the break through the 50-day line, which is possible because this is a late stage base failure. There's your breakout. There's your failure. It heads down. It's either heading for the 200-day or it's going to fill this gap, and it basically just filled this gap and then turned. So you have to figure out if you're shorting this and you're playing for it to hit the 200-day, you also have to be aware of the fact that it could just fill the gap, which it did, and that could be a turning point. So you got to figure out what's going to push you out of a short if something starts to turn on you, and that's very important in this market. So it also makes it very difficult because while the market has been coming straight down for most of January, as a chart over here shows you, zip, there you go, it's a little bit difficult to play heavy on the short side. And periods where I've made 50, 100% very quickly, and I would say in hindsight, if I had just stayed 200% short on January 1st and just held, sitting through all the crazy bounces and everything, I could be up 100% right now, the way some of these things have broken down. But it's not so easy because you get these gaps, and we know we're in this market where markets, as we did back in summertime in September, August, September, they can break down hard and then snap right back to the upside and in your face if you're short. So you got to be careful about that sort of thing, and you have to be taking profits along the way. So it's a little bit more difficult on the short side in terms of the constant need to guard against snapback rallies that can go, right up an unmentionable part of your anatomy just when you least expect it. I mean, because think about it. Yesterday, the market looked like garbage. We're down heavy on huge volume. Fed comes out and says, yeah, the economy sucks. Like, that's anything new. And we're not going to raise rates. Like, that was a surprise. And the market spins around for a little bit and then heads lower on heavy volume. You're seeing stocks across the board just busting. I mean, even Facebook yesterday, if you look at this pattern here, forget about today, this was looking grim yesterday, very grim. You've got Apple after earnings, could have been treated as a shortable gap down, but it's undercutting, finally undercutting this 92 low, I believe, from here back in late August. Let's see, what was the low today? Actually just missed it. So it still has yet to undercut that low. Maybe it'll do it later in the day. I think you're probably going to roll over again. So I'm playing it on that. I would play it on that, any shorts on that basis. If they're bouncing something and it brings it up into a shortable range. Okay, I see that, Dr. K. You're back up.
Okay.
So anyways, I'm kind of on a roll here. But in any case, Apple continuing to bust. You see Netflix. We talked about this last week. As it's coming down through the 200-day, it's shortable here using the 200-day line as your stop. You can see that it did have one blip here 5 days ago, and that actually carries right up into these lows along the 105, 106 level, and now it's just busting lower. From here, your next low, I mean, the thing you have to keep in mind is you are undercutting all these lows from October and September, but as we get down here, your low is 85.50. I would use that as a near-term target low, I suppose, if this market keeps coming down, which I'm expecting it to do. We might bounce around it, but we'll see how we close. I think you're in a highly manipulated environment, but the general movement of money is out, and so in the short term, I think they can jack things around on you and make them do all sorts of funky things. It's like, anybody remember sea monkeys, which were basically brine shrimp? You get them when you're a kid. Anybody remember those, or am I dating myself in a very bad way? But I remember those things. You could take a flashlight and make them, move around in a little herd or a little swarm, and they would spin around. And I don't know. I call this like a sea monkey market. It's just doing all these weird backflips and somersaults, and it's all over the place on an intraday basis. And like I said, that makes it difficult on the short side. Forget about the long side. I don't think there's anything here outside of a couple of quick draw McGraw type trades. So, but let's just keep piling through these. But you'd watch this. I suppose you could cover this if you were shorting it on the basis of it undercutting these lows, and then waiting for a rally up to the 200-day moving average to short it again if that occurs. But that may not occur. So you got to figure out how you're going to handle this if you want to short this turkey. You look at Google's another one. Google's very similar to Amazon, but this one actually came down and pulled into this gap, and I don't know if it, let me get a crosshair in here. Give me a second here. Right here we go. Whoops. It should be showing. Let's see. No. Yeah, you can barely see the track line, but let's see. You just barely undercut. Yeah, you barely filled this gap. So that's just exactly like Amazon. You barely undercut the lows of this rising window here on the gap up, and then you rally back up into the 20-day. Now these guys come out with earnings today after the close. So something might happen. You might push up to the 50-day tomorrow morning, or you might just break for the 200-day. I would not play earnings roulette with this, but you're seeing these after breaking down. Now they're rallying back up into areas of potential overhead resistance. So they could bring them into short sale range. Microsoft's another one that's broken, violated the 50-day. Now it's pushing up into the 20-day. They come out with earnings today after the close, so we'll see what happens. Mostly what I'm watching on earnings reports is I'm looking for rallies that might be shortable. So while I'm not really willing to buy the Facebook rally today, I am looking at that as a possible short. Maybe not today, maybe next week, maybe tomorrow, I don't know, we'll see. But I tend to think that if the market is going to head lower, you're going to see more of these leading stocks roll over and continue lower. So that's something to keep an eye on. We've talked about Baidu before, and that rallied back into the 20-day, but it was actually shortable in here. You could have treated this as a shortable gap down, I believe, and using the high of the day. So there's plenty of stocks breaking down. There's plenty of ways to play them for those who understand the rules behind shorting and the methods behind shorting and selling short, and all of that's detailed in the new book that came out. Well, it's not so new anymore. It's almost a year old, but it came out in April of last year. Somebody says, I remember sea monkeys but never got them. Jealous that you did. Yeah, that would be the one toy I think we'd get every time we went to SeaWorld when I was a kid. We'd make a trek down to San Diego from LA and spend the day at SeaWorld and pick up sea monkeys. So it was all highly thematic and fun. Anyways, some other names. Let's see. Let's pop through here. But you notice Tesla. Tesla is so far down in its pattern. Reminds me of that old song. It's so far down, it's starting to look like up to me. But you're getting close to undercutting some major lows in here. You got about a 180. What's the low here? 180, 140 here, and you're looking at 177.22 over here. So this is on the weekly chart that I'm showing underneath the daily chart. So that's where it seems to be headed. I mean, this thing is in deep doo-doo. So, you know, if you've been shorting this one, it was last shortable along the 200-day, had a shortable gap down type move off of what is, you know, basically a head and shoulders type formation, but you had a big pod. It's a double pod, and then you failed here. You got one move out of it, another move out of it. Now here's your next move. Now you're breaking out. I suppose you could look at this as a big head and shoulders now, and you're starting to head for the neckline of this, sort of a two-headed head and shoulders type formation that has a neckline around 180 or so, and so now it's heading for that neckline. Maybe it bounces off, but these guys come out with earnings, I believe, next week after next, so it's something to keep an eye on, rallies. But you know, this thing's just getting fried along with everything else. So you know, Priceline's another one. This is a stock that surprises me with its persistence in moving lower. I keep thinking, you know, you undercut this low a couple of weeks ago, and I thought, okay, that's cover point for now. Maybe you get a rally on earnings back up towards the 50-day, the 10-week, or the 40-week, the 200-day. But no, it's just keeping on the downside, keeping its downside momentum going and heading. It seems like it's heading for this low at 992. So it's busting below the well, heading for the 1,000 mark, and it looks like it may bust through the 1,000 mark. Now, I don't think there's a Livermore Millennium rule in reverse. There is a century mark rule, but I don't know if there's a Millennium mark rule. But maybe we could make one up and use that as a basis for shorting it. But they're coming out with earnings in the middle of February. I believe it's the 18th. And so on that basis, probably something you'd want to wait on and not really start shorting here. You want to go after fresher situations. So in that spirit, let's look at. I'm looking at Under Armour. Now it's gapped up today on earnings, but this stock had a nice long move. If you look at it here on a weekly chart, long move, V-shaped type of base, straight down, straight back up, breaks out, fails, and it was shortable. I think we talked about this back here when it was close to the 10-week line. It's just continued to go lower. It broke down here to the 200-day, undercut the line, rally back up, then holds along the 20-day line, and then it breaks back for the 200-day, hangs along the 200-day, so you could have been shorting it again there, and then you get a little, get some movement down slowly to the downside from there. So that would have worked out pretty well. Now, what I notice here, looking at this, you're holding up above the 50-day moving average. The high of the day, I think, is 82.90. So there is potential maybe to short it using the high of the day as a stop, but it needs to run out of gas. And so far, I'm watching it trade all morning. I haven't done anything with it. It really hasn't run out of gas just yet, but it may at any point. So you want to keep an eye on that, and you want to watch it on the 620 chart. So let me kind of reorganize myself here. Okay, there we go. We'll go there, push these back. Make everything nice and neat again. Okay, now we can look at the 620 chart. So you can see that you haven't had a breakdown on the 620 chart yet today. Let's make this bigger so everybody can see it, or at least I can see it. So it's hanging out, but there is a stock moving in sympathy, which is Nike. And Nike's given us a 620 sell signal, then you rally back up to the 20 period line here. And this is what it looks like. Now, if you're observing, you might notice something. If you look at this and you see that this was a late stage failed base, failed in here, tried to break out here, failed, hung along the 20-day line just underneath the 50-day line here for a few days and then headed lower. And I thought the stock was shortable right about there, and I think we probably talked about it in prior webinars. But you come down to the 200-day, you undercut the 200-day, and then you bounce off and rally. Now, if we go back and look at UA, Under Armour, back here, back in late November, you can see when it broke down, it headed to the 200-day, undercut the 200-day, and then it rallied. And then it hung along the 20-day for 4.5 days, and then it broke to the downside. Now, this is where Nike is, I think, in its pattern right now. You see the similarity? You broke down to the 200-day, you undercut the line, and now you're hanging along the 20-day moving average. So this is one that I'm short right now on the sympathy move to UA. So, that UA may become shortable later, but to me, Nike is definitely a short here. Another one I'm looking at here is Panera Bread. This one is, if we look at it on the weekly chart, whoa, how did that happen? That's a compressed chart. Here's a big, ugly double bottom. And remember that topping patterns, and I talk about this in the new book on shorting, topping pattern, I've talked about this before, topping patterns will tend to look clown-like. In other words, they're so big and exaggerated that it's like clown's feet, those big flappy Bozo the Clown type feet. Everybody's familiar with those. But you get this sort of big, ugly double bottom. You see that? And it's really now turning into a left shoulder, a big head, right shoulder, right shoulder. In this case, the right shoulders are higher than the left shoulder, but that doesn't really matter too much. Not that big of a factor in my view. But it did rally right up to the midpoint of the double bottom where it failed. So you can consider this a double bottom base late stage that tried to break out and never really did it and failed. Now, if we look at this, you can see Panera is really a stock that's gone nowhere. It's at the highs of its range. Maybe it's getting some play from what's going on with Chipotle Mexican Grill, which has been having their issues with various E. coli bacteria in their food. Very appetizing. But if we look at this on the daily chart, you can see here's the double bottom, and there's a midpoint of the double bottom here. And you come down and you undercut, so all of that's correct. You get this big move up, and now you fail here, boom. You rally past the 50-day and the 20-day. But what I'm watching for here is some failure along these highs, and I did short it yesterday, and I'm short it right now, just not that big of a position, maybe 1,500 shares right now, I think. Is that right? Yeah, about that much. So I might put out more if it rallies, but it does get resistance up along these highs. So that makes sense to me if you're scooting past the 50-day and the 20-day, because stocks can sometimes do that. And they can go 4 or 5% past a key moving average, 20-day usually, or the 50-day. And on a failure, on a base failure, the 20-day becomes a very critical moving average. So right now the stock's hovering along the 20-day moving average. If it breaks, then that might seal the deal, but I'm willing to short it if it moves up to the 190 to 193 level, say. So yesterday I think we got just above 192, so I'm just pinging it there and seeing if it gives way, which it did a little bit, but not a huge amount. So they come out with earnings in a couple of weeks, so hopefully something breaks by then. But you can see there's already been some distribution in the stock. Was looking for some news on that. If anybody's aware of that, I'd like to know why this broke so hard. But I got to think that that's telling you might get some selling. And notice how the volume picked up yesterday. You closed in the lower half of the range. So let's see. Let's go. So I'm just checking Nike right now, watching it. Trading bid 60.50 right now. Let's take a look at the 620. Yeah, I mean this thing's finding on an intraday basis, finding resistance along the 60-cent level. So I'd be looking for another break to the downside here. But it was shortable this morning because you sort of got this divergence in the MACD down here, if you can see that. So right after the opening, along with the UA, was hit the 82.90 high, but UA is still hanging in there. So I'm keeping an eye on all of these. LinkedIn is rallying. They come out with earnings, I think, next week. It's at the 10-day, so I don't know if you wanted to short it here, or you're looking for a breakdown. But I'm more interested in finding, say, fresher ideas that might be higher up in their patterns. Here's an ugly chip maker, microchip technology. This is what it looks like on a weekly chart. You see this thing's just kind of ugly. It's had a big upside move here, going sideways for about the last 2 years, and ran right into its 10-week moving average yesterday. So that was a short point, and now it's rolling in. I did have this short, but I covered it as it undercut the 10-day line earlier today. So you can see I'm taking a day trading approach to this, and I'm just hitting things. If I get a nice move to the downside over a couple of days, I'll take it. So Starbucks is another one that could be breaking down. You can see it's finding resistance along the 20-day moving average, so that might be shortable using the line as a stop. You can see you've had a long move here, and it might be setting up to top. So I think the 20-day becomes critical because basically you do have a late-stage base failure once it blows below the 50-day moving average, and then you get one rally here, and now it's just bouncing around. You had a pocket pivot here, but there's no follow-through. So when you get a failed pocket pivot, that usually spells doom for a stock if it can't get going off of that, and it's showing some other topping signs. So here the 20-day might be an area for a stop. So this is a fresher possible short sale opportunity. Another one like this is McDonald's, which broke out, and they had great earnings, I guess, because everybody's eating breakfast there now, so now you can clog your arteries 24 hours a day, I guess, with their breakfast food. Although Big Macs probably do a pretty good job of that as well. But you can see the stock, I think it's getting defensive flows into it. So with the Dow following through the other day, and I don't pay any attention to follow-throughs. I just think they're baloney, and they don't really work. I watch stocks, and that gives you a better idea of what's happening. But for the Dow to be the only index showing a follow-through, to me, indicates that money, institutional money, is looking to go defensive. And so it's hiding in bigger cap, more established names. And this brings up the specter of something nasty coming down the pike here, because when you see stuff like this, it reminds me of other periods where you've had these major liquidity crises, and it doesn't end well. So you see money moving into these big cap names, and the institutions are more worried about not performance but survivability. They have to be invested all the time, and they take into account a company's viability in terms of remaining around. Whereas something that's a fly-by-night company, a Grubhub or maybe a Workday or something, those are companies, they could go out of business if things got really nasty. And so they're going to move into bigger cap, more defensive, more established names. And I think that's what you're seeing with the follow-through in the Dow. Dr. K, do you have any comments about that? I was wondering whether, in periods where you only see a follow-through in the Dow, does that ever lead to a big rally?
Not really. I mean, I don't. Even back in the day before QE, when the market direction model did have a heavy reliance on follow-through days, the accuracy of those follow-through days was quite good, but only applied to the S&P 500 or the NASDAQ composite. You had to see a follow-through on either of those indexes for it to register. The Dow made very little difference. There wasn't enough statistical significance with the Dow because it's just such an old outdated index. These days, of course, with QE, that kind of threw the whole follow-through day, distribution day thing. It threw a wrench into that whole thing. So the only usefulness to follow-through days these days is just to see how other people perceive it. And if you see some of these sites going bullish, it's often a contrarian indicator. Just like the other follow-through day we had 2 days ago. That I didn't see any reason for MDM to go to a buy signal because there was not any leadership of note, and therefore it remained in cash. It looks like the downtrend is still intact, but of course we're volatile. Therefore, MDM wants to catch a trend, and right now the trend is relatively difficult. Dow was outdated. Dow was outdated, so that's not something that I pay much attention to. Of course, the street loves to talk about the Dow being up or down, 300, 400 points, because that makes good press, but it's quite meaningless.
Definitely. Let's see. I'm watching Starbucks here. I don't know. I feel like I want to short this turkey right here. Market's coming in. We're up 6 on the Dow now. So we've been up, we were just up 50 just a few seconds ago. So let's see. All right, I'll take a starter position of 2,500 shares short on Starbucks. There it goes, filled at 58.245. Must have been an algo that bought it, I don't know. But another one I'm seeing is a short, possibly is O'Reilly, right into the 50-day moving average. This is this had a big move, and O'Reilly Automotive, and you can see here, looking like a head and shoulders, yes, and you've been finding resistance along the 10-week line. So again, you're running into it. It's just past the 10-week, but notice it's right up against the 50-day. So it's within about 1.5% of the 50-day line. So that puts it in shortable range, using the 50-day line as a tight stop. So I actually did short that this morning, right around the line, and so that that looks actionable here to me. Somebody asked, who's Bozo? Bozo the Clown. So, yeah, I know I dated myself on that one. But I remember Bozo was very popular. So, let's see. I remember once watching a show where some little kid says, "Cram it, Clowny," to him. And they had to cut to a commercial real quick. But back in those days, I don't think they taped the show beforehand, so they kind of got caught on that. Anyways, let's look at some more stocks. I'm looking at these chips, so we looked at this, right? So this is starting to roll over again. I think you're going to see everything roll over again. We're turning red on the Dow, so, I mean, you're in a bad way here. And like I said, the movement into big caps, and think about also last year, the NDX, the NASDAQ 100 led the market, and that's really what was driving the market and where all the leadership was. Other than that, you saw the Russell 2000, the New York Stock Exchange Composite Index is really in bear markets already, and we've talked about that in previous webinars last week and the week before. And so they've been in a bear market for a while. And so the movement into the big cap NASDAQ names, that's probably also institutional money flowing into names where survivability is a key characteristic. So Google, Netflix, Amazon, Microsoft, Intel, Apple not so much, but most of these big cap names that are likely to survive a very bad economic period, which you saw the durable goods numbers down I think it was minus 5.6% today, and that was much lower than the minus 0.6 that was expected. So, the economy is slowing down, and my thinking is that the sell-off so far in January in 2016 so far is based on the market seeing into the future and seeing that we're slowing down very rapidly on a global basis. And you hear all these guys on TV talking about how it doesn't make sense that the market's selling off because the economy is robust. And they're missing the point that the market's probably discounting the future here and indicating that something nasty is coming down the pike. And we'll see what happens. But for now, we know that we're in a downtrend. It's been very shortable. And probably if you're a short seller, and I think if you're halfway good at it, you've been making at least some money. So I know I have, and I'm halfway good at it at least. Somebody says they remember Howdy Doody. Oh, Pastor John, you are dating yourself there. Now, Howdy Doody was something my older brother used to watch. I don't think I ever got into it. anyways, microchip resistance here at these lows. So another one I'm looking at is linear technology. Same thing, resistance along these lows. And these are names that go nowhere. So they're doggy semiconductor names. But I'm thinking if the economy is weak, as I just pontificated about, then semiconductors are likely to be weak as well. So, you know, in that instance, then I think you can be short a bunch of them and or a couple of them like these, the weaker ones, and make some money on that. And they're probably a little bit slower than most other things that are flying around these days. So, any other questions? XON, potential pocket pivot. Well, I guess you'd call it pocket pivot. I'd rather short it here. If you're not in an environment where I think you're going to make any money on the long side. So if you think you want to try it, you know, I think you're swimming against the tide, and it's kind of silly to be looking for long ideas when there's a plethora of short sale ideas. So I wouldn't really waste my time. You have something to interject there?
Sure. Also, you know, in this market environment, as reiterated, if you're going to play a pocket pivot, wait for it to retrace so that your risk is really small. Because again, you're swimming against the tide in this environment. So if you're going to try something, you know, wait for it to pull back to a logical area of support, and then maybe initiate a position with, you know, 1 or 2% risk on the table, then it's no big deal.
Yeah, I would concur. So, you know, I'm not going to buy into this. It's way extended too. You're up like 10% on the day. So it must come out with earnings. So, I mean, this was a great stock on the way up. So, but it's done now. No news on it. Yeah, so short it. Somebody said, here's one for you, Dr. K. The email about the upside price target hit on the volatility model on 127 was very helpful in guiding me on when to sell. You want to expand on that, Dr. K?
Yeah, the price target changes with new information. So, in other words, there's no. I'm never going to put a price target in an email because that target will change. Can you hear me? Okay. Okay, I see. There's Gil going to take a break. Yeah. So basically, you have a price target that the model uses with each trade, but it's like a moving target basically. So in the event it does hit, as it did the other day, yesterday, then I will go ahead and email members. I'm not going to do that every time because it really doesn't make a difference in terms of, you know, the model, in terms of when it goes to cash or switches signals. But I threw it out there just so that people could understand that the model does have upside price targets, and that is one of the facets of the model, such that when that is hit, the stop is moved higher so that in most cases, the trade will be closed out at break even in the worst case, such as yesterday. So it's another aspect to the risk reward characteristics. And of course, when that upside target hits, then we're all in a very psychologically strong position, an ideal position, because basically the worst case scenario is a flat trade, and the best case scenario is that the signal just keeps working. On these sell signals where we're selling volatility, the market can trend higher for a period of weeks, and then you just sit on the signal, collecting profit. On the other hand, on the buy side, when you're buying volatility, those signals tend to be short-lived because the market likes to take the stairs up, but the trap door down these days. But those are fun signals because, as you've seen, some of the profits can accrue very quickly, sometimes within a day's time. In which case, as we've also noted, it's best to keep a very close eye because you might want to take some of those profits off the table, especially with something like UVXY that can fluctuate 20% or more in a day. Oh, Gil, your speaker.
Oh, okay. Sorry. All right, let's check some things out here. UA, where are we? We're at 81.58, so getting closer to the 82.90 high. But again, you're watching this to see if it gives way. The one I would be going after, though, is Nike. So, and like I said, I'm already short that we're seeing it come in slowly. So, let's see. about a little more Facebook. They're punching it. I'm sorry, not Facebook, Starbucks. Okay, where are we? Let's see. Man, everything just looks like garbage. CRM, look at this thing. Oh my God. Grim. That's grim, and it's heading for this low. Let's look at some things that are actually up. So I'm going to go through my short sale watches, my big one. This one's up. Data's up. Maybe it's rallying into a shortable zone here. Stock is up 320. I don't know if earnings came out. I'll have to check that. SWKS got pummeled yesterday on the Apple news. This is probably going lower, and I know it looks like it's way down there, but look at where it's come from. This thing could go a lot lower, especially if Apple starts coming apart. So possibly high of the day would be your cover point. So, but I think my favorites would be today would be Nike, O'Reilly, ORLY, Panera, which is coming in now, Starbucks, watching UA, watching Facebook, LinkedIn possibly. Somebody says, I met Ross Haber the other night. He says hello. Ha, Ross. Ross Haber used to run money. He came in 2000 and started running money, and then they fired him, unfortunately. And then I got him a job running a hedge fund. We actually did pretty well running a hedge fund with the guy named David Feldman, who's a very smart guy from Fidelity. And David Feldman actually offered me the job. This is back in like 2004. He came into the O'Neill offices, and he was a big shot at Fidelity. He ran their mid-cap growth fund. I think he did very well. And then he left to start his own fund, but he ran into some problems in, I think, 2001 or 2003, I think. He was shorting the market, and the market bottomed in 2003. But Feldman impressed me because he came in and spent 2 whole days with me because he wanted to go over all his mistakes. And so at the end of that 2-day period, he offered me a job in a new startup fund that he was putting together. And eventually they had like 600 million in assets. But I sent him Ross, and Ross worked with him for a while. And Ross did pretty well. I think Ross does better in that sort of environment than trying to run money at O'Neill where he didn't do so well and they let him go. But I think he does much better running bigger portfolios. That's just my perception. Anyways, yeah, and I know all about Ross's story. Maybe too much at times. His life can be a soap opera, but we won't get into that anymore. Anyway, we'll leave Ross alone. But he's a good guy. I think he's reasonably smart and understands the market. And you know, did okay helping to run a hedge fund. So Feldman was running it, but Ross helped out, and Feldman was very happy with Ross and thanked me for sending him his way. So I think I remember at that time Ross was trading out of his apartment and trying to make a living that way. So, which is a rough way to go, unless you got like $10 million you're trading. In any case, where were we? Let's look at, these are coming out with earnings, I think. Did they already come out? Oh my gosh, look at that. They must have, because they're blown apart. Celgene, shortable yesterday at the 20-day. Amgen breaking down. I mean, this is just grim. Biogen, probably, oh, it was shortable yesterday at the 50-day line. Here it comes. Market's rolling in hard. This might get ugly. So, we'll check my positions here. Looking good. Okay. Keep going through some of these. Netflix is still rallying. It could be shortable, and again, you know, you're looking for that. I think 85.50 low is your stop or your downside target. O'Reilly is still hanging in there around 250. Lululemon is probably rallying with UA, so I think this becomes a short up here. Watch your 620 chart on it. I mean, if you look at this thing, this is a nice breakdown. So base failure here, you've rallied all the way back into the underside of it. So you're in an area where it looks shortable. You might use the high of the day or this high over here as a stop. Oh, let's see. SunTrust, oh my gosh, that looks like garbage. Nike, we went over. VMware, they beat earnings and gap down. So much for that. I thought that was actually rallying. You know, the rails have been pretty ugly, and I never really shorted them. But, you know, what's been the canary in the coal mine here? It's been the rails. They've been ugly for a while. And you look at their numbers and you look at their business, everything is down. You know, the carloads are down. Everything, earnings, sales, revenues, you name it. It's all ugly. And if the railroads are stinking this badly, what do you think that implies for the economy? So, like I said, I think we're heading for something nasty. So, it's time to start counting my precious metals coins. Let's see. XRS Tal Education Group, what about it? You gonna buy it? I wouldn't buy it. I would be very cautious about buying anything in this market, especially a thin little stock like this. I don't know, trades 564,000 shares a day. Nah, I'm not a buyer. I mean, come on, you're gonna make better money shorting. Why even waste your time looking at stuff like this? It's extended on the upside, you know. For lack of a better word, thinking about buying something like this, I think it's a Chinese stock as well. Is it not, Dr. Hayes? Is this a Chinese stock? It is, isn't it? Okay, if you want to buy this, I think you're kind of dumb. What? There goes Starbucks.
Yeah, I believe so. Let me just, yeah, it is. It's that K through 12 tutoring.
Yeah, I'd short it. Oh, here's one for you.
Very defective pattern. I mean, you got earnings report came out fine, but I mean, you had a wedging. I don't know. It was very sick wedging activity on this thing, and I mean, yeah, you got that uptrend. I think that's what's lured people in. It went from 30 to 50 in a quarter. You know, and but again, you know, these types of stocks are going to be very prone to market direction, and I mean, you can see that this thing went off. What looks like it lost about I don't know 20% there.
Back here.
In a couple. Yeah. Well, and then up more recently, it's had some. It'll get pulled down in the market. In other words, it seems like it's trying to resist it. It will get pulled down, and it's going to be volatile. So, you know, I was just looking at the you know, the bounce that we've had in the major indices is the weakest bounce that we've seen. You'd have to go all the way back to 2012, but every other bounce we've seen since 2012 has been a lot stronger than this one. So, and also back in 2012, there was still, I think, Operation Twist or some form of QE on the table. We don't have any QE now, so I think that we break to new lows, and then it's a question of how low we go from there.
Yeah, I think we need a big crash day. So anyways, all that's to say is I wouldn't go near this. So, and I don't understand what makes anyone want to buy anything in this market. You know, I think you're looking the wrong way. So you're looking to the right, and there's a big bus coming down the street on your left, and you think you're going to cross the street, and it's going to run you over. So be careful. Okay, where were we? Most everything else is getting hammered. So Avago, here's another one. This might be a short. I think they come out with earnings in, when did they come out? Let's see. Let's go here. 224, so not till the end of February. So that's actually possibly a short here using the high of the day as a stop. Looks like it might head lower. But that you can see here you have a late stage failed base. So you failed, you tried to break out. It actually was looking like a head and shoulders, and then it broke out on earnings, and now it's failing in a little bear flag, and looks like it's going to head lower. So that might be actionable here. Your downside target would be somewhere down in these lows, which is 115.21 here and 117.17 here. So I don't know. I think we're in some big trouble here. This looks like it's getting worse. So I predict by the close, Dr. K, we're going to be down 750 points on the Dow. How's that?
I'll see your 750 and raise you another 1,000.
Let's just go for it. All right. What else? Dick's Sporting Goods rallying with Nike and UA and the whole gang and Lulu. These are all sports-related type names, so that's probably a short up here. Use a high of the day as a stop, but you can see this thing's so far down. Look at how grim that is. I mean, that's just so ugly. And there's so many patterns that look like this. So anybody who's telling you, oh, the market's acting well, or the market's why is it selling off? It's been selling off for a long time on a broad basis, and we've seen this. Go to the. I'll show this again. The New York Composite. I mean, this thing topped here, back here, and it went lower and never really recovered after the breakdown in August and September, and now you're rolling over to lower lows, and so it's just. You're in a bear market. You have been for a while, and so to sit there and wonder, oh, things are good, and the market's been telling you there's trouble for a long long time. And what we've seen is the big indexes, major market indexes, have been able to hold up because money is flowing into the big cap names. And to me, that implies that institutions see big trouble on the horizon, and so when they're buying stocks, survivability, established businesses, that all becomes a factor. So any other questions before we knock it off here? So I really want to get back to trading. I think this could get exciting. Well, more so than it already has. So some of these things are just getting raked. Palo Alto Networks. Heading back from the, wow, that's grim. Somebody says, great webinar. Well, hopefully I was able to give you some things that are actionable, because most everything is down in the dumps. But you're looking at microchip is one I just talked about, and that is heading back below 43. So linear technology is pulling in a little bit. Again, McDonald's is another one, you know, like I was saying, it's wedging here on light volume, and so I think money just pouring into this, and watch for some sort of a breakdown. That could happen. So we'll see what happens. So someone's asking, when will the recording be available? As soon as I can post it. So it takes a little while to process and then convert into an MPEG. Is it MPEGs or whatever it is? Into a video file, and then we post it on the site and send you guys the link. So just hang out and it'll be ready shortly. So anyways, I think that's all I've got today. So I really need to get back to trading, because I don't know, I'm smelling blood. Well, you're seeing some blood too. Actually, a lot of blood. So, I mean, it's pretty grim in general. And I have to admit, sometimes, despite the fact that I'm making money on the short side, and that's always a lot of fun, there are overriding concerns with respect to the financial system as a whole, and where things are headed that way. I think the Fed is probably going to eventually be forced into some sort of QE4. You know, Mario Draghi, babbling about printing more, and talking about how his critics have no solutions. You know, what is the alternative? Well, the alternative is to let the system clean itself out. But they've gone so far overboard in terms of creating another bubble that you know, I don't see any way out but just inflating it until it actually pops. And when that happens, that could be very nasty. So
yeah. And that's why fiat currencies always have a limited lifespan. For anyone to think that the dollar is going to be the end-all fiat currency is foolish, and they don't know history. Because all you have to do is study 8,000 years of history, and you'll see that every single fiat currency, without exception, eventually has an end to it. And the U.S. dollar, sad to say, will have its end as well.
yeah.
And I know that sounds like blasphemy, but that's the truth. I mean, you know,
I agree.
Go to Martin Armstrong, the website. It's armstrongeconomics.com. That guy knows history better than most people I've ever met, and his blogs are fascinating and have a startling accuracy to them. So, you know, and he bases everything on the pi cycle, meaning that, you know, if you look at the whole universe, or multiverse, if you will, Earth is not even a grain of sand, and so these forces that prevail, and, you know, universal forces, determine apparently the cycles, and he lies all about this being able to pinpoint the changing of the guard and the major tipping points, and he's been able to do that since he launched this thing in the early 80s, with astounding accuracy. And supposedly he's a self-made billionaire, but I won't go into that. But the guy is really smart and is very knowledgeable, so I think it's a great daily read for me.
Cool. Sounds good. Yeah, so, you know, I think you're seeing some major changes coming down the pipe, and I think we're heading for something nasty. So, on that note, on that positive note, thanks for showing up, you guys, and we will catch you next time. Good luck trading. Hopefully you guys can make some money on the short side by the close today. Take care.
So long, everyone.